Let's go straight to the markets today to see what reaction they had to this Reserve Bank rate rise. The market was headed down by around 1% before the RBA decision at 2:30 Eastern Time, and it then took another sharp leg downwards as rates were raised more than the market expected. So the ASX 200 at the end closed down by around 1.5%, as you can see here. Now, our dollar jumped to 72.25 US cents, then came down. 3-year bond yields also jumped today. Now, among the best performing stocks today, mining services company Perenti Global. Well, it was up by around 9% at the close, and after it won a $520 million underground mining contract in New South Wales with the gold miner Evolution. There's also the chicken producer Ingham's. You can see here up 3.5%. That's on takeover talk. These shares are down 26% in the past year. The business is worth around $1 billion or so. And the fuel retailers, Viva Energy and Ampol, both higher with better margins as oil prices and fuel prices rise. Those going down fastest include the buy now, pay later company Zip. This is because higher interest rates and rising defaults have hit the whole sector. And at the close, you can see down by some 13%. Also down several of the most shorted stocks on the markets: Nuix, Clinuvel, Kogan, Points Bank. But it was clear the markets were surprised by the size of the RBA rate rise today. So let's cross to Edward Boyd at the Reserve Bank today. And Ed, look, there's little doubt about that surprise, but also that the RBA today basically said that there's more to come.
The RBA Governor, Philip Lowe, made it very clear that there will be plenty more interest rate rises over probably the next 12 months, Ross. You know, looking through the statement today, Governor Philip Lowe mentioned the word inflation 13 times. So that just shows how significant it is in their thinking right now, the inflationary pressures across the entire economy. We were expecting a cash rate increase of 40 basis points today, but the RBA clearly went harder than that, lifting by 50 basis points. That's the biggest increase to Australia's cash rate since February 2000, and we've now had back-to-back rate hikes. So the first back-to-back rate hikes since 2010. So it's a bit of a historical day today. Oh, the lights have just come on here at Martin Place. Bit of a historical day today here for the Reserve Bank of Australia. We know the cash rate, though, Ross, is going to keep going up more and more as things go on.
OK, so the other aspect of this is, though, you look at the UK, you look at the US, you look at New Zealand, you look at Singapore, all of them have higher cash rates even than the Reserve Bank today. That's why the next increment might be another 0.5%. There's going to be plenty of speculation about just how high and how quickly they want to move these rates.
I've already seen a couple of economists come out with predictions saying next month will be likely a 50 basis point rise, followed by 50 the month after that. So clearly the Reserve Bank of Australia is starting to play catch up with the other central banks from all over the world. We've seen them lifting rates for months now. Australia is starting to catch up to those banks. So we're going to be, the expectation from economists is we're going to be raising rates pretty sharply over the next couple of cash rate decisions, potentially even more than that, for the rest of this year. Look, Ross, I did catch up with Bisa Dita today, the St George chief economist, and asked her if she was surprised by today's cash rate hike of 0.5%.
No, it wasn't a surprise move. We expected they would move by 40 basis points, but we had been flagging the risk that they might move by 50 basis points. The RBA now joins other major central banks in their recent moves by moving 50 basis points, including the US Central Bank and our closest neighbour, the Reserve Bank of New Zealand.
But the reality is that the Reserve Bank has still got a lot of inflation coming down the pipeline towards it. It's got certainly these energy price rises that are coming, and the interest rate rises themselves will add to inflation.
Ross, we know headline inflation of 5.1%. That's the highest level since the GST was introduced in the year 2000. And underlying inflation at 3.7%. That's its highest level since 2009. And remember, these are backwards-looking figures from the end of March. So we'll get the next quarter's worth of inflation data on the 27th of July next month. So we'll start to see whether the Reserve Bank's moves today and last month are going to have any impact on that inflationary pressure you talk about in the economy, because clearly it's a big worry. We already heard Treasurer Chalmers talking about the cost of living pressures hitting all households today, and mortgage holders in particular, Ross.
OK, and Besadita, again, she's also talked about this future of interest rate rises. Let's pick her up again today.
We expect that there'll be several more rate rises before the end of the year to take the cash rate to above 1.75%. We've got unemployment down near 48-year lows. We've got inflation that's very elevated. We've got economic activity that is expanding very quickly. Though the mix of those factors suggests they will need to continue to raise rates.